Good morning, everyone. A very warm welcome to the first knowledge series session of the day. And we'll try our best to make it as knowledgeable, as entertaining as possible. The objective of this session is to bring out the nuggets of wisdom from some of the best known funds in the country who've been doing this in and out, who go through hundreds of plans in their daily schedule on a monthly basis, who go through multiple pitches, who invest their money, who invest their LP's money, who have their successes and their failures, and within the parameter of an hour, we'll try to dig out as much as possible for the benefit of the audience today. So there are some general questions, some deep dives, some nuggets of wisdom towards the end. To start with, I think we should do an intro session first. We'll start with Bina.
Hi, I'm Bina Trivedi. I am a partner with the Investment Trust of India Growth Opportunities Fund. We are on our second fund. We've just announced a first close of 80 crores on our second fund. The target is 200 crores. We are sector agnostic investors.
Hi, Manoj Agarwal from SEAFUND. We are a tech-focused fund right now in second fund. We are Bangalore headquartered. We've invested in about 25 odd startups till now. I'm happy to be here and looking forward to interesting interaction.
Hi, I'm Deepak Daftari. I am mentor to the IT and e-commerce committee at Bengal Chamber of Commerce and Industry. I run my own internet branding and consulting company, and I do angel investments in my private capacity.
Hi, I'm Anirudh, Damani. I run a venture fund house. We invest in companies and take them from 0 to 100. So we've got an early stage fund, a growth stage fund, and we also run an international syndicate fund as well. Currently on our fourth fund. We've invested in about 120 companies so far, and we've got about 5 unicorns in the portfolio until now.
Hi, Amitesh. I'm Vice President at Vedanta Limited, and I also lead their corporate venture capital. Our role at Vedanta is to get as many startups to work with and also provide the growth capital as needed.
Good morning. I'm Anil, Joshi from Unicorn India Ventures. We are early stage venture capital based out of Mumbai. Thank you.
Good morning, everyone. Thanks much to the BCC&I for having us here. My name is Sunil Cavale. I'm a part of a venture capital fund called Speciale Invest. We are an early stage deep science and deep tech focused fund investing across technologies that usually take a long period of time for gestation, require larger amounts of capital. We invested across space tech, life sciences, robotics, semicon, and multiple others. Currently deploying from our second fund, which is about 300 crores in size. Have about 40 companies, 35 companies, active companies in our portfolio. Thank you so much.
Sunil, so all of you run funds. Every fund has a core philosophy. Every fund has a different flavor. Why don't you speak a bit about the philosophy of your fund? What is the ethos, the basic principle on which your fund was formed?
Yeah. No, thanks so much for asking that question. Gives me an opportunity to talk a little bit more about how we approach this. The fund started in 2017, late 2017. We've been actively investing in what we call as deep science and deep tech in India. And our belief is India is at a confluence at this point of time where we've evolved from a services-based economy. We've evolved from a consumer internet-focused economy. And now we've moving into hardware-focused, product-focused, startup industry. And we took inspiration from what we saw in Israel, where a tiny nation with a fraction of the population of the country was predominantly building some incredible technologies, for defense, for water, science, semiconductors, biotech, and so on. And we had the right ingredients in India to do this. We had the best of talent. We had the formation of a stable government that was coming in, and forward-looking policies that encouraged innovation. And we figured that this was a gap in the Indian ecosystem to do early-stage investing in deep science and deep tech in India. And we particularly look at technologies that are fundamentally difficult to build, difficult to engineer. There are strong IPs, patents that are at the core of the product offering. in a level that it brings a strong technology-based differentiator to the company. We started predominantly investing in space technologies, Agnikul Cosmos, which a bunch of you might have heard recently, launched their first suborbital rocket from Sriharikota about 2.5 months ago. We've invested across semiconductors, life sciences, robotics, quantum. In most of these investments, we've been ahead of the curve to say we invested in space tech before the government of India opened up the space tech ecosystem for the private players. We invested in hydrogen before the National Hydrogen Mission came out. We invested in quantum before the mission came out. So we've tried to take some leads from across the West and see how best we can look at opportunities in India and take the economy forward by building technologies and supporting technologies which have strong impact for the nation going forward.
Thanks. Anil?
So we've been in the space for now almost over a decade and currently in third fund, and has been evolving because what we believe that the VC investment is always futuristic. My friend has already said they try to stay ahead of curve. So when we started our first fund, it was more about India's story. So we were focusing on businesses which were helping digitizing legacy business. So invested in quite a few which were focusing on digitizing. So had one investment which is in digital banking, open bank. Similarly, as we moved ahead, second fund, we started focusing more. Of course, we carried on the success of fund one, then added tech-enabled businesses. And then we started investing in businesses which were focusing on hardware-led. So I had investment in robotics, had investment in smart vending machines, smart locks. And now we are in our third fund, which of course we are carrying on what we did in first fund and fund two, but we have now also added deep tech. So now fund three is more about deep tech. Of course, probably we have similar kind of footprint what he has. So we have invested in space tech, we have investment in semiconductor, we have investment in again robotic, very deep tech robotic. Now investing in one company which is leveraging blockchain and traceability and ESG. One more investment which we are doing, we firmly believe that India is highly underserved in terms of financial solution or insurance. So these two again sectors, we have quite a liking. So in all our fund we have fintech, insurtech. Here also we are looking to invest in one insurtech. So it's fairly diversified, but focusing more on deep tech.
Thanks, Anil. Amitesh?
So at Vedanta, our philosophy is to create an ecosystem of startups who will help us in our industry 4.0 and 5.0 journey. So we are very agnostic when it comes to what kind of technology, but we are very focused how these companies, these startups can help us in our operations, the key operations of Vedanta. It could be into manufacturing, mining, chemistry, so many things happens, right? The idea is to create that ecosystem, and the way we are creating an ecosystem is not only by deploying funds through the corporate venture capital, but I think there are many startups who sometimes doesn't need funds. If you see some of these analytics company where the only cost is the manpower cost, and they're fairly margin-rich businesses, we have realized that they actually don't need funding, but what they need is a petri dish or an asset to test their product and see how they can grow from there. So at Vedanta Spark, we believe that whatever is required to create that ecosystem, sometimes it's the growth capital, sometimes it's providing your assets. For example, the zinc smelters, what we have, nobody in India have. Not even close to what we do with zinc or silver. There's no competition at all. So we are competing with China's and South Africa's of the world or some companies in South America, Latin America. So we are able to provide these assets to the Indian startups to see how they can build on what they have created as a proof of concept. I did hear in the first session about the free POCs. what we believe, we are absolutely against doing any free POCs. We help startups come up with the solutions, and we actually pay for that. And we not only pay for the PO, but we put their skin in the game and see how a variable component can be put to the benefits which we derive. So apart from the venture capital, we try to see how we can help the startups. There's a lot of mentorship which also happens from our leaders who have been there in the industry for so long, and they can help navigate the startups into the right, whether it is product market fit or enhancement of any product or the solutions which they are offering. So what we have seen in the ecosystem as of today, we are engaged with more than 150 startups. Have done close to 200 projects with them. 7 million has what we have deployed, but that's too small for the size of Vedanta. So this year we're aggressively increasing that budget, coming close to a 50 million, and the plan is to go to 100 to close to a $500 million portfolio as soon as we can. So probably it'll take another 3 to 5 years to reach there, but I think the vision is there. And we keep working on what works best, because we have, I'm sure that when you found any startup, when somebody, starts that journey, it's never in their mind that I want to become a unicorn. And if it's there, it dies its own death. What should be there is you're actually solving some real problems, and if you have that PMF, then you are successful. And we want to be in that journey. Where we actually help create that category or the PMF and support you in that journey. Thank you.
Thanks, Amitesh. Anirudh?
So I think I don't have a lot to add. They've covered a lot of the points. But we emerged out of a family office that started its journey in stockbroking and in 1970s. And then we started this fund in 2019, prior to which I was also investing out of the family office for almost 7 years. So we've understood one thing, that there's a lot of innovation, there's a lot of things that are happening in the country, but we've understood what would work for us down to two things, right? One is that we thematically invest. We don't look at sectors, we look at themes. We look at things that are going to play out over the next 7 to 10 years. So sometimes for example, right, the current theme we're investing in would be fintech infrastructure, where we believe that lending and will become pretty huge in India. We're only at about 100 million credit cards in the country, and we have 1.4 billion people. And if you compare that to maybe a Western market like US, where there's 1.8 billion credit cards for 300 million people. But the spending on Indian credit cards, by the way, debit cards are almost 1 billion debit cards. The spending on Indian credit card is 3 times higher combined than all debit cards combined. So obviously there's a huge need in the country. There is a lot of consumption that rides on credit card growth and other solutions like that. We are currently investing about 1 out of 8 startups. We are focusing on space tech. We believe the space tech economy will be worth about $1.5 trillion globally by 2030. India's share should be about 10% of that, which is a huge market, and we're barely scratching the surface. Along with Speciale, we're also early investors in Agnikul. And we right now are almost closing on 2 more space tech companies at the moment. And third, we look at B2B SaaS. I think build in India, sell to the world is a theme that is going to play out for another 10, 15 years at a bare minimum. So that SaaS theme is definitely there. And last but not the least, we look at consumption enablers in the country, right? What is going to enable direct consumption? Because India is going through its own leap, that before modern retail gets to places, the mobile phone has already got Amazon, Flipkart to your house, and D2C is where the play is going to be. So for that, an entire infrastructure is required, which enables the consumption, and for which we are investing quite heavily. So we distilled it down to saying, okay, these are the themes we're going to invest in, and how are we going to pick companies? We just believe that any great business in India comes at the back of 6 core principles, right? First, there should be a real problem that is getting solved. A lot of the times, startups or founders are building things that are not real problems. They're good to have solutions, but not need to have solutions. So it has to be need to have. Second, we look at companies where the founder has a right to win. Why are they doing what they're doing? Have they spent at least 2 to 5 years on this problem personally before they've decided to launch a venture? Or is it something they heard or read about and therefore it sounds, it's the flavor of the month, effectively. Third, we look at companies that have positive unit economics. You have to make money on every sale. Operating cash has to be there. You can be negative at a net level, that's because you're growing. But you can't be negative on a transaction level, right? You can't take something for 20 rupees, sell it for 10, and sell a lot of it and say that here's the growth, right? Because you're losing every time you sell. Fourth, we look for massive scale potential. Venture capital is kerosene, right? And at the end of the day, it's going to be lit and it has to have a big enough fire. Otherwise, it doesn't make sense to take any kind of VC money. Next, we look for category winners. India is a very binary market. The top two in a category always take 90% of the business. So we look for companies that have, they are very clear about which category they exist in and how they're going to win it. And we're also looking for them to have strong moats. How are they going to cement their position as a category leader? And last, for us, and it really is last, that we look for technology-enabled businesses, not technology-first businesses. Why? Because we're looking for dhanda, right? Why they do the dhanda ke liye technology ki zarurat nahi hai. So we believe that the first objective should be do the business, then figure out the tech, right? Don't do the tech and then figure out where the business is going to be, right? Figure out the business first, because the customer is very discerning. He doesn't care about your technology. He cares about whether you are going to solve a problem and how much are you going to charge him to solve that problem. And therefore, technology, sometimes the best businesses we've invested in are actually not tech first, right? They built the tech after maybe Series A, right? They've used some combination of different softwares to put together what looks like a technology business, right? But eventually they build the tech after Series A, and after that, that tech is so robust that actually takes the business forward. So those are the 6 core principles, and I think from a very clear perspective, we like to double down on our companies. So we start with a $500,000 check, go all the way up to Series C, and we're looking at investing about $12 million across that journey. All of this is just to make sure that the founder understands we're there for the long haul, right? And that do the right things, the business will come. And so that's how we've invested. I think it's a bit wide, but we spent a lot of time managing and helping the businesses out and making a lot of connections. And hopefully today I'll speak to Vedanta as well and see how we can get some of our businesses to work with them.
Thanks, Anirudh. Manoj.
So I think a lot has been covered, but just to keep it brief from our perspective, in our Fund 1, we kept it at the intersection of technology and verticals. For example, BFSI, FinTech. So FinTech was finance function and technology, then health and technology. Then we did some core technology businesses in SaaS, enterprise SaaS. Again, supporting various, large enterprises in different areas like customer experience, healthcare, BFSI. Then we also invested in hardware, IoT and robotics, and then in a few platforms. So they were across 4 buckets, all technology enabled for sure. And in the current fund, as the ecosystem has evolved and as we have moved more towards deep technology, we are more focused on deep technology, but again, focus areas are semiconductor, mobility and transportation, logistics, climate tech. Today that is, there's a lot of talk about climate. And then we are also looking at robotics, IoT as a continuation of our manufacturing IoT and stuff like that, what we also did in Fund 1. So broadly, those are the themes we are looking at. And it was interesting to see some startups actually yesterday which kind of, are doing work in these areas. Some of them were truly doing work in deep tech. So we typically come in early. We come in as first, institutional check, sometimes even pre-seed, but our preference is to come in at seed to pre-series A, and then we try to go up to Series A or maybe pre-series B kind, across 2-3 rounds. That is how, we are looking at this fund. It's about 250 crore fund, and we are looking at putting up to a couple of $1 million in a company across these 2-3 rounds. That's
Bina.
it.
Yeah, thank you. I do have a lot of common boxes that were ticked off by my earlier panel colleagues. Little different from Speciale, which is uniquely focused on deep tech. It's not like we will not look at deep tech. We will definitely look at it. We educate ourselves. We do see some opportunities, and in the current fund, we are seeing fair amount of conversations happening. But I think, as Anirudh said, we're not wedded to technology. We're wedded to the outcome that technology brings. And yes, to be able to go in pre-seed and to be able to back a technology, I think we will need a lot more conviction, etc. We are driven by fund economics. That is also a goal. And while we are patient capital, it has to be within the realm of the fund. We have looked at almost all of the spaces that were mentioned. In the second fund, we've closed one transaction that has been announced already. And that is in the agriculture, food supply, IoT, and all of these boxes are ticked in that transaction. That we have written our check. We are writing an average check size of around $1 million, so it's not to say that it will be not less than $1 million or more than $1 million. The range could vary. Obviously, as an early stage fund, we double down on our winners, so we might do staged funding, one shot, follow-ons, etc., depending on the business plan and the stage of the business. Pre-seed will be at the extremes. We will be looking for proof of concept in the majority basket. There is definitely room for pre-seed. It's not to say it's excluded. But again, skin in the game is something that I think we have learned and learned to respect, appreciate. And skin in the game can come from a variety of factors. That does need to be demonstrated, that does need to be understood. We're also a platform that's housed in the listed Investment Trust of India Limited, so our ability to add value in several sectors is exceedingly high. We're looking at the financial space, not just in terms of lending, but by multiple early stage plays where tech enabling has led to a much wider market, bringing in retail aspects which were not hitherto known. So we're exploring those spaces. We have, like I said, already written our first check in the previous fund, which is now pretty much in monitoring and exit mode, and we've already had exits there. We've done fintech, where we've got part exit. We've done robotics. We've done drones. We've done EV infrastructure. That is the way we kind of played it. We bet on the theme, but we also, after truncating the theme, have to figure out what is economically viable and what plays in with the fund's objectives. So we look at this broad basket of aspects. And then, of course, I think which is paramount for all investors is the quality of management. That is absolutely something that is the deciding factor for us. We look at a lot of pitches. We listen to a lot of people. I think there is fair amount of learning in terms of the involvement, engagement with the founder. We are happy to support, help in every which way that we can. And we have done that for several companies, whether it be on regulatory aspects. I take it that corporate governance is not really a value add. A, it's the intention, and B, that's just learning and efficiency building. I don't think one gets into partnership with any company or any founder where that is a vacuum. In terms of business building, we open our network, we open our ecosystem. We try and support the entrepreneur in every which way, work actively alongside. We've seen our portfolio companies go through extreme challenges, and I must say it's also been our good fortune and the kind of founders that we work with where but they have come to us transparently with bad news, and we have been supportive and realized that yes, not every battle is won. We have to fight for the longer pitch. And yes, the support is there. We encourage transparency on all accounts. The team, besides myself, is a very, very young team, very entrepreneurial, and not given into any bureaucratic, long-winded approaches. And we welcome a conversation with an entrepreneur at every stage, right from pre-seed, seed, A, B, and we hope that many of them will graduate to C and D, and the institution has the wherewithal to be able to help them through all of those stages. Thank you.
Thanks, Bina. Can you hear us all at the back? Okay, thank you. Anil, we'll start with the next question with you, because I think, given my limited understanding of some of the panelists, I think you are the oldest in this industry, not by age but by experience, because before you started your fund, you were with Mumbai Angels, and you've heard probably thousands of pitches throughout your journey. So, and what we've seen yesterday and what we are seeing today among the audience, it's a very young audience, plenty of startups, plenty of people aspiring to start. So I think 90% of them would have this basic question, that given a 5-minute or a 7-minute time slot, what is it that I should do? What is it that I should not do? As a fund manager, what are the 5 key points which you like to hear, which makes it very clear for you whether you are interested to listen more or not? And what are the 5 things which raises a red flag or turns you off, that nahi, ye mere liye nahi hai? And then, even though the entrepreneur might talk, you might shut your head from within, because those red flags have been crossed. So if you can share your experience, 5 do's, 5 don'ts for a pitch in a limited amount of time.
यार आपने भीष्म पिता बना दिया.
That was playing in my head, by the way.
ज्ञान तो थोड़ा कम है, कोशिश करता हूँ. So I remember when I started mid 2000, that time there was nothing called VC investment. Even angel investment was not there. And my journey started somewhere around early 2000, when there was nothing called angel investment, which started all 2006. And we were always, tuned to listen to a presentation of 30 minutes, whether you like it or not, but that was the, scenario those days. And when I came to Mumbai Angel, we were very strict, because we always respected investors' time, because it's difficult to get, because these are all who's and who of Mumbai. Each must be 1,000 crore plus those days. Mid 2000, today must be much more than that, and getting there 20 minutes is difficult. So we were very categorical that any presentation cannot be more than 10 minutes, and then 10 minutes we would keep for Q&A. Now even 10 minutes, fast forward 2024, actually it's 30 seconds. If somebody is not able to get your attention in 30 minutes, then you keep singing song, nobody is going to listen. So it's very important, I'll try to share some. I don't know whether I'll cover 5 points, but I think in early stage, there is no history. Today, if we talk about Vedanta, I think each of us can do, beautiful case study, because they have long history, they have data, they have, background. But when it comes to startup, there's nothing. In most cases, these are kids who come straight out of college. Even the college may not be IIT, so what do you do? So it's very important, I think, for entrepreneur to keep in mind that they first showcase themselves before talking about what they're trying to solve. If people understand your strength, your compatibility, I think they will have ears for you. So it's very important. Most of the time, I think we heard, of course, yesterday was very time controlled event where 5 minutes, but I think in still 5 minutes, entrepreneurs should make an attempt to talk about who they are. I think that's what is the best showcase they can do, because if I don't know who you are, what you're solving, there are 100 people who are solving this. That's one. Secondly, it's very important to make clear what problem you're solving, right? In many cases, people don't even understand what you're doing, and then they switch off, their brain, and they will not give any attention. So very important about problem solving, then what solution you are solving, right? What solution you have, does it has any IP or not? If there is an IP, I think we will have all ears for your pitch. But if it doesn't have IP, it's me too. I'm also making coffee. He's also making coffee. What makes us different? But look at Blue Tokai. I think a lot of investors are looking to invest in that. Very interesting, right? So you need to be unique. You need to be IP-led. Fourth thing, I think most of you heard very clear when Bina yesterday was talking about numbers, are very critical. And I can take liberty to talk about yesterday's example where you say total addressable market is 5 crore. It's actually not done for us. I'm interested in something which is, upward of $5 billion. 40,000 crore की बात करता हूँ तो मैं 5 crore कहाँ देखूँगा, right? We get dime and dozen pitches to listen. So I think market is very important to understand. And since you are restricting me to 5, I have 5 more, but I'll stop here on 5th one. That it's very important for investor to have a visibility of exit, right? I'm not investing in your company. I'm not a typical Indian arranged marriage की शादी हो गया तो मरने तक आपके साथ रहूँगा. I have to move out of your life. I have to get out of your business at appropriate time to make return on my investment. So these are the 5 which are must do. I think my co-panelist will share more. I'll quickly come on couple of points which are no. I think many a time investors ask very specific, point blank, what was your revenue last year, right? So he is interested in knowing कि भैया आपने 1 crore किया है या आपने 1 lakh रुपया किया है वो बताइए. They are not interested in knowing I did this POC, I did this song, dance. No, I'm not interested. Number means number. Never ever fumble with number. Second, if you don't know anything, accept it and say, I'll get back to you. In many cases, I have seen, people just keep bluffing. Now, this is an investor who actually listen to 10 pitches every day. He is listening 3,000 plus pitches every year, and you are one pitch. So their wisdom is much far higher than what you think. Even the junior most guy in our industry would have, a lot of wisdom in terms of, because they are doing that day in, day out, right? आप एक चीज 100 बार करोगे तो अपने आप expert हो जाओगे, right? So that is one. Third, I have every single pitch I hear one thing that we don't have competition, which is very absurd, right? Trust me, there are 10 entrepreneurs in your own locality or maybe at least in your own state, if not city. And then India is a big country and then world is much larger. So there are several guys. So I'm investing in one company which we believe is a kind of science fiction movie. आप देखते हैं, सब देखते हैं बॉलीवुड की. आप believe नहीं कर सकते कि I thought this is only one which we are investing. I said let's take a bet on it because this is very unique. And I asked my team, is there any competition? बोला हाँ सर, US में एक बंदा है, इससे 4 कदम आगे. Right? So there is a competition. There is somebody who's actually trying similar thing in Israel. There is somebody who's actually trying in somewhere in Europe. So competition आपको नहीं पता होगा, that's okay. You may say that I don't know, I may check and get back to you, but never ever say I don't have a competition. Right? To give a simple example, coffee says I have no competition, भाई चाय दुनिया पीती है. Right? Today people have choices for tea, people have choices for juices, so that's a competing because either I'll have coffee or I'll have some other thing. I can't have 2 different beverages at same time. So I'll stop here because I think we have long panelists. सब गाली देंगे मेरे को रात को, खाना भी नहीं खाने देंगे. वैसे तो list is long, but I'll stop here because
I think
you want me to continue?
The enticement should be there that you've given the nuggets, the tidbits, and let people catch you off the stage and get more.
अरे यार आपने भीष्म पिता बना दिया, ज्ञान तो एक पैसे का नहीं है.
Bina, would you like to share in brief your 5 do's and don'ts?
I would not call them do's and don'ts, but I think, and I'm going to flaunt my gray hair here, I am the oldest vintage person here. And we started off in the mid-90s, in an earlier avatar, post-liberalization. Anirudh will be thinking and say, was I born then? But yes, India did do deals then. It used to be called private equity in a generic sense, but there wasn't that much compartmentalization. As the ecosystem grew, then seed and venture and growth and buyout and everything kind of got compartmentalized. But then it was like one mixed pot. And I spent some 20 plus years in that business. Then I came on to the early stage side post 2017-18, post 2007. And then I saw this crazy euphoria around that time in the valuation. And I used to talk to people, and not with ITI. And the standard answer was, early stage mein aise hi hota hai. Okay, and for those who don't speak Hindi, this is the way the early stage works. And the question being, yeah, this guy has 2 crores in top line. How come he gets a valuation that is 45 times or 40 times or whatever it is, okay? And I used to use this line called return on capital employed. I said, what is ROAS? Profitability, forget it. You may not have profitability if you go by the accounting formula of ROAS. But there is something called capital efficiency. If Anil at the other end can build a business in 10 crores, I cannot be splurging 100 crores and expect to get the same valuation. There is very elementary financing. Kitna paisa andar gaya, kitna paisa bahar aaya, or aayega, okay? So I think this thumb rule of capital efficiency, which the young now call unit economics, because all of that is there. Yes, we are a growth market, but somewhere money has a cost. Money has time cost. Money has opportunity cost. So I think that is something fundamental. Just, to think that yes, I will grow it, but growth is coming at a cost. The VC is paying for it. And in fact, we had this discussion very recently at the ITI fund. You're buying growth. The VC is buying growth. And how much is he paying for it becomes determinant of the final returns that he will make on that. So that is one aspect that is important to me. And I have learned, so this is my old learnings that I kind of carry forward. And one thing I have learned is my generation was the first to experience mobile phones. We started out at, and Raghu maybe can remind me, some 20 rupees a minute or 24 rupees a minute or something like that. Today, you speak pretty much free, okay? And the whole concept of mobile phones coming in was not based on what are you replacing, what do you not have. It was, everybody said, where is the need for this? And I mean, today, 20 years later, we realize what the need for it was. Yesterday, I spoke to one entrepreneur, and again, to Anil's point of no competition. I said, yes, no competition, because nobody has ever thought of this. Their life was going just fine without that. You have to kind of go out and create the need for it. That itself is a cost. So I think this need thing is learning. I never thought a Zepto would be as popular as it's now is. I mean, the economics part, we'll still wait and see. But that's been the learning. I mean, we are getting into an economy that is more aspirational, that is focused on convenience. So some parts will be there. But don't think you are the only one who can solve for that need. We have the Paytm example. We went and created all of the infrastructure, and then whoever is banking off it is a separate one. So, yes.
Any don'ts? Any particular one or two you want to share quickly?
I am not the spray and pray person.
No, the red flags, that something which is a no-no. Once you hear that, beyond that you don't.
Yeah, this, this betting on this B2C just by virtue of social media and Google Play and, whatever ad thing, and building your business off that alone, to me, is a big question mark. I'm not saying it cannot be done, but to me, it's a big question mark.
Thanks, Bina. Sunil, would you like to quickly share your 5 do's and don'ts in brief?
Yeah, we do pre-seed, seed stage, pre-product, pre-revenue companies. So a lot of the numbers that my co-panelists have shared, we just don't have any of those to make our decision. So a lot of our decision making happens on the vision that the founder is able to articulate and how big can that opportunity become. And to understand that in greater detail, some of the things that we spend a lot of time on is to understand the core motivations of the founder to do something like this. The people aspect is extremely important because as pre-seed investors and doing deep science and deep tech, we envision this journey to be about 6, 7, 8 years long, if not more. And to understand what motivates them to go through this extremely hard journey where capital is scarce for deep science and deep tech in India at this point of time. The process to build technologies, to iterate, face constant failures, come close to the brink of losing out on capital, losing out on money and having to shut shop. All those are extremely challenging situations. To understand what motivates the entrepreneur to do this is something that we spend a lot of time on. 2 is articulation of the problem statement, right? I think it's extremely important. We come across a lot of entrepreneurs who talk about broader problems in a sector. I'm just taking an example to say, we understand that in EVs, there are problems with charging, there are problems with safety, so on and so forth, but those are all, in my view, very high level understanding of the problem statements, right? What are specific nuances that you have understood? What specific insights have you gained about the industry, which very few others have figured out? And how are you going about how are you going about addressing those problems is what I'm very keen to hear. The third, I think, is to also talk about vision. Yes, this is where you are today, but where would you want to be 5, 6, 7, 8 years from now, right? And a bunch of semiconductor companies that we say will come and tell us, we want to be the Texas Instruments of India, right? Now that is different from saying, hey, I want to do revenues in the second year, I want to do revenues in the third year. So articulation of vision is extremely important. I'll stop the do or the things that we look forward for. What I think puts us off, so to say, is one, if you are not able to articulate why you are the right people to do this, right? Like I'm going to partner with you for the next 6, 7 years. I need to be convinced that you are the best people to do this. So whatever supports that, to say that, hey, I have these particular backgrounds, these particular experiences, this is why I'm well positioned to do this better than anybody else in the country, is something that we would definitely want to understand a little bit better. 2, I think, is also, I'm borrowing some of the points that were mentioned earlier. Competition is extremely important. And the way that we look at it, there is direct competition and there's indirect competition, which is what Anil sir also articulated. You may be selling coffees, your competition is not just another person who's selling coffees, but your competition is essentially who is fighting for the same 100 rupees in your pocket, right? So how do you articulate competition is something that we definitely look for. And I think the last part is why are you different? Why are you able to do this better than anybody else, right? Like what is the technological moat that you have that enables you to do something better? I'll take a pause on that. Yeah.
Thanks, Sunil. Amitesh, quickly,
Yeah,
if you
quickly,
can.
I'll not get into 5 do's and don'ts, but I'll say what really works for us is articulation, as Sunil was mentioning. Articulation of the problem and seeing the larger picture and putting your vision on the table of what can be done. And doing all this, Anil also mentioned about being on top of the numbers, that really works. And being honest with those numbers of what can be done and what cannot. Looking for all the competitions which are available in the market, a deep, thorough study of those competitions and where do you place yourself. We have seen there so many similar solution or similar product company existing and coexisting together. It doesn't mean that you have a competition, then you have to shy away. You have to be part of that ecosystem. So that has to be very clear in terms of the articulation. And what really didn't work or doesn't work for us is not having a clarity of what you're building. Sometimes people just come up, and we are seeing a lot. So many deep tech companies coming up, and sometimes we believe there's no real, say AI or ML. It's just analytics, or you're just coming into the foray of what the other people are doing and trying to build something which doesn't exist. So I think be honest to yourself of what you're building, looking at what the need is. And this is like old saying that you don't create a product out of what you think your technology is, but you create something which is the real need of the market. You don't push it. It has to come from the pull in the market.
Thanks, Amitesh. You would like to take it next, Manoj, quickly?
Yeah, Deepak, I'll be quick like previous times.
No, the reason is there are two more interesting questions which I'm sure the audience would love to hear from the horse's mouth.
So I'll focus on don'ts, no? You are quite focused on that.
Yes.
So two things which I think are very, very critical, which we see that founders neglect, especially early on, is compliance and finances. So, these are two things you should not neglect from day one. The way you form a company, the way you manage your cap table, you have to go to the right people and manage it well from day one. Otherwise, as you grow, you will find it difficult for investors to accept that. And sometimes, people do lose out on good investors, or a lot of time and money is spent correcting that. And the other thing is understanding and managing finance. So a lot of companies we invest in, I think all of us will agree, sometimes they don't come from that background, they don't understand finance and numbers so well. But it is important that they kind of adapt themselves to numbers and finance and, the metrics, everybody talked about different metrics, but, overall finance, numbers, what business you are doing. I mean, I find it very difficult to accept early on investors just, started selling. And then when you ask them their numbers, they say, can I check and get back? I mean, the numbers have to be there at top of your mind, whatever business you are doing, what you are spending, what kind of money is remaining in your bank, and, how does your unit economics work. If you're burning, fine, but you should know what is happening with the. So these are very critical two areas, compliance and finances, which you should not neglect. I'll just, everything else has been said, so I don't want to repeat that. So that's it from me.
I think because we're talking about a 5-minute pitch, right? So it's actually important that you can distill your business down into 5 minutes to explain it to somebody. And I think that sometimes we used to call it that an elevator pitch as well. It's just because as an investor, we want to understand how clear you are about what you are doing, right? And if it's taking you 30, 40 minutes to explain what you're doing, it usually means that you yourself don't know what you're doing, right? And therefore, you're taking a very long time to explain it to somebody. We were all able to explain our fund theses in less than 5 minutes. And it's a very complex business, right? We didn't get into how we raise money and how we're doing our compliances and all the 10 different things we have to do to run a fund. But I could explain to you within 5 minutes of how we pick a company. Similarly, it's on the founder to explain it to us. Again, we are not the smartest guys in the room. Let's be very, very clear on that. The best person to run that business is the founder. I think Anil said that multiple times yesterday. Right? But the point is that you have to still explain it to us, dumb it down to us, because we are going to become part of that journey with you. Right? And we need to understand what the heck is going on, what the heck you're really up to. So I think a lot of founders get lost or get in love with the technology, and they forget that they have to explain a business to us. Right? So that's very important. And very important to also understand that venture capital is only for 0.5% of the businesses out there, probably even less than that. Most businesses in the world have run and become massive without venture capital, right? It is the most expensive form of fuel to light a fire, which is venture capital. If you can light a fire with a candle, use that. Do not use ATF, for example, right? And that's very important for the founder to understand, because something that Bina was talking about, which is ROCE, right? It's important to understand that your ROCE has to be higher than the ROI that the investor wants, because capital is a fuel, right? It is a commodity at the end of the day. So if I've given you X amount of money and I'm expecting 5 times that back, it means your business must grow fast, higher than 5 times in that same time period. Otherwise, you will lose your business to me. And it happens very often, more often than you can imagine. That people lose their entire business to an investor, because the investor's expectation of growth to achieve their milestones of ROI are far higher than what the business can achieve. I think I was telling that to one of the founders yesterday also. So it is not requirement, it is not a validation that a VC should invest in your business. Very important to understand why you need that capital, how long you need it for, and how are you going to return it, right? And think from that perspective, sometimes debt might be cheaper. Because at least the debt, once paid off, is off you no longer have to deal with him. One of the things you have to deal with the VC is after you've utilized our money, maybe built a satellite, put it into space, I'm still on your cap table, right? I'm not going anywhere. So that's very, very important to understand. Not all businesses require VC. And that has to be very clear from your pitch, that why do you need this capital, how big, that's why we keep talking about scale. How big is the space? How big is this fire going to be? And how much warmth am I going to get out of it? And is that going to be more than what I have given to you as fuel? That is very, very important when you think about that. So these are the very simple nuggets. I think there's no specific do's and don'ts because every business and every pitch will be different. It's very important to make sure that you can't sell an investment in 5 minutes. You can only pique our interest in 5 minutes. You should just give us enough that we make sure we call you. Uske beyond, all the other things will happen, obviously, in due diligence and all that stuff that happens. So that's my 2 minutes of wisdom.
Thanks, Anirudh. I think now we should do something more interesting. Since all of you are running their first, second, third, fourth, fifth funds, I'm sure you have a lot of portfolio companies. There are a lot of successes, some mega successes and some mega flops. And some companies which you thought would go to the moon actually went down the dump. So each of you, I would request if you can share some of your portfolio experiences in terms of where you went wrong, why you went wrong, and some successes which gave you mega returns, which were beyond something which you didn't even imagine when you were investing in the company. We'll start with you, Anirudh.
It's always better to talk about the losses, right? But see, we've had a lot of companies that have obviously not done well, and I can promise you that out of the 20 reasons why a company does not do well, not being able to raise money is not in the top 20, right? That's never been in the top 20. It's always the problem has been that you've not been able to identify the customer and you've not been able to solve their problem, right? And that is 99% of the businesses are failing because of that in our portfolio, right? That either you've not delivered whatever product or service you want to give to your target client, or you've not identified the target client and hence you don't understand what they want, right? And as long as those two things are not there, right, usually businesses fail. And so it's happened multiple times in our businesses that, built fantastic product. In fact, we had a company that was number one, it was probably before Ola in cab bookings, right? It was before Ola, right? It was number one. It actually had the RTO licenses that nobody else had, but got lost in product, right? And then started losing leadership. And that's why where we learned that if you're not in top 2, after 3, 4, 5, India just forgets you, right? If you think about cab bookings, we only remember Ola and Uber. We don't remember Meru. We don't remember Mega. All these cab companies are gone. Where are they? They used to be there. We only remember Flipkart and Amazon. What happened to Snapdeal? Does anybody buy on Snapdeal anymore, right? Now we're talking about, I don't like to call it quick commerce. I like to call it convenience commerce, right? That because they're no longer delivering in 10 minutes, all about, within 30 minutes. We're talking about Blinkit, Zepto, and out there somewhere is Instamart also, right? These are the 3 players. Nobody else remembers the 4th, 5th, 6th player, BB now and all that. So India is a very discerning market, right? And that's why once you drop out of the top 2, our companies have failed. So we'd like to sell the company before the Series A round if we feel that they're not going to be a category winner, right? And so that's where we've lost money in most cases. And mega successes, honestly, I don't know what creates a mega success because it in itself is a science. Or maybe an art, I think. Because sometimes the company you didn't think was going to make it just becomes massive, right? And a company you thought was going to be massive suddenly goes down. So one of the companies we'll talk later on today is, I think, Agnikul, which is the founders are here. And we'll talk about their own journey, right? They've had a very, very interesting, very, very tiresome journey. I think Speciale can also attest to it. Multiple points in their journey, we were not 100% sure ki hoga ki nahi hoga, right? But obviously when you see that rocket take off, I think every single investor, every single board member was very emotional on that day because we know that that entire team sits in 40-degree heat in 80-90% humidity in the middle of a forest to test out those machines, and they live in these truck bunkers, right? And it's when it gets hot, it really gets hot, right? You're lit, and there's a sign that says over there that please walk on the paved path because snakes have been seen here, right? And then you have to stay almost an hour outside of Chennai. There is no lights at the there is no lights at the end of the day. It's all dark. And imagine the kind of motivation required to build that in Chennai, right? To build that kind of a company in Chennai. And honestly, whether that rocket took off or not, they deserved every bit of that success that they're getting, every bit of the way they've been covered. Because if you just look at the जो मेहनत लगी ना उसको करने के लिए and जो dedication लगा है करने के लिए, that for that alone they should have won. And I think that's what drives the mega success, right? Not all the metrics and all that वो बाद में आता है, but it has to, मतलब ये जुनून होना बहुत ज़रूरी है. Crazy amount of junoon is required for success.
Anil, would you like to share some of your successes and the biggest flops? Maybe share your experience with Bank Open.
So we are in an industry where it is given that failure rate would be anything around 40 to 60%, right? Whatever we do, we cannot discount it. However good we are, however good is the entrepreneur. So I'll share something. As I said earlier, that many cases, in fact, every single case we try to invest in something which is futuristic, and we invested in a company which was ahead of its time, right? So now Cloud Kitchen is, of course, is a bit of flavor, but we invested in something star entrepreneur, IIT Delhi, held senior most position in top 5 company if you can count in world. Exceptional skill sets to execute, everything was there. And it's not that he has raised 1, 2, 3, 4, 5 crore. He raised good 15 crore, of which 5 crore was his own. Now everything tick in box. What can go wrong? You have money in bank. You have star entrepreneur. He himself has put 1/3 of his own capital. But I think it was ahead of time, right? Many cases we lose when, I was just thinking when Anirudh said that most of the businesses have failed because they are unable to raise money. One of the reason is that, it's much ahead of time. People don't need what you have produced, right? Today they don't have need. As Bina said that 20 years back, mobile phone probably people thought. So by the way, Bina, the rate was 64 rupees a minute.
It was 64, huh?
Yeah. So today, I think you can very well live with 64 rupees of, recharge. So I think I'll not, because every entrepreneur in my view is a star entrepreneur. So I don't want to go to good, bad, ugly. But I think we have lost most of our, money in businesses which were ahead of its time. Could be they didn't found customer, they couldn't raise money, blah, blah, blah. But at the end of the day, the business was ahead of, time. Success story, of course, I would love to share about Open Bank, but I think it's, very well known. People will find it. But I'll share something which normally VCs don't invest, and it's a very unusual investment. We invested in a company called Gen Robotic. I'll take 2-3 minutes if you allow. Yeah, if you allow 2-3 minutes. So I was actually literally forced to meet, this 4 co-founders. I didn't wanted to go and meet them because one, I said what they're doing, they're basically building to clean gutters, right? Manhole cleaning kar raha hai, but like VC nahi invest karega. Nahi, sir, you should meet. So I was literally pulled. I said 5 minute ke liye aa jaiye, and out of respect, right? If IS officer says, तो आप मना भी नहीं कर सकते जाके. So I went. The room was around 6 by 8 type small. Hardly people can stand. And I saw, there was something hanging from wall, made out of plywood and cardboard. And the clarity founders had in their mind actually made me write a check of 30 lakhs immediately, which I didn't wanted to even meet them. And they were so clear why they're doing it. and what is the purpose. And they were very clear that, Anil, this is not one manhole, but this manhole across country and across world. The problem is universal and people are losing life. Almost around 5,000-6,000 people die every year because they have to get into shitty manhole to make our life easy, right? So I said, okay, let's put 30. But by the time I went from Kerala back to home, I got a call that, Anil, I've got a grant of 1 crore. Why should I take your money? Right? मेरे लिए वो उसको equity dilute करनी है और यहाँ उसको 1 crore free मिल रहा है. But I said, आपका 1 crore आने को बहुत time लगेगा. Why you want to waste time? And then I said, okay, I'll do 60 lakhs. So that's how I landed up investing 60 lakh in this company. Why I like this company and why I wanted to share, one, shitty business, कोई करना नहीं चाहेगा, but this is one single company in our portfolio, has been profitable the day they went into production. They went into production immediately after we invested 60 lakhs. तो ऐसा नहीं कि उन्होंने 2 साल लगाया product बनाने में या ऐसा कुछ, but every single year they have been profitable. Every single they are doubling their revenue, twice, right? They today, and excellent margin they work on. It's a marvelous product they have built in. I invested in a company which was just 6 people team, of which 4 were the founder and 2 were the intern. So literally 4 आदमी की company में invest किया. Today they have 400 people in team. They have, I can proudly say they have one of the best world-class R&D center with 60 people. Now imagine a small company which hasn't raised much money, but the importance they have given to the innovation, and every year they come up with a version which they are outpacing their competition by almost 2-3 times. They have a competition which has been done by boys from IIT Madras, and these boys are not from IIT, come from vernacular segment, deep in Kerala. Sometimes you have problem in speaking in Hindi, but still they are doing business across country. They have sold their product in few countries and been profitable. I think I'll be proud to take this company IPO in 3-4 years time. So that's why it's special. Unusual company, unusual founders, and they have every single, I encourage all our portfolio company which are in hardware, go visit them, spend 1 day, understand what they have done. How can a small company can build a team of R&D of 60 people, right? So that's special to us. Thank you.
Thanks, Anil. On that note, we'll go to Speciale Invest. And
Yeah, I'll keep it short. I think I'll just add on to what I'll just add on to Agnikul, right? Like we've seen the journey since 2018. We were first investors in the company. It's been close to six years now, a little over 6 years now. Their first suborbital launch happened a little over 2 months ago at this point of time from Sriharikota. India's first semi-cryogenic engine, India's first private launch pad set up at Sriharikota, handheld by ISRO to develop the product over 6 years. They're still pre-product, pre-revenue, but they've raised $40 million of capital. And it's an incredible success story for Indian deep tech at this point of time, because it shows that startups can actually go through this journey, can raise capital for a vision, for a long-term vision. They can work with government, and they can set up facilities. They can convince large institutions to invest capital in them, and solve for a very long-term outcome over the future. To see that journey, to have a ringside view, to see that journey is an incredible honor. It's a testament to the perseverance of entrepreneurs. What India can do. Some of the things that Anirudh mentioned it's just incredible it's an incredible spectacle to go and visit their testing facility in the IIT Madras Thayur campus. They sit in shipping containers, 200 people sitting there on the ground. Snakes, lack of electricity. When it rains, it's bad. It's incredible perseverance. It's something that humbles us in our own journeys to look at them and say, how far they've come from where they were. On what we've seen not work in our portfolio in some occasions is essentially figuring out where the problem lies in the priority list of the customer, right? Like the customer can have 10 different problems, right? Like your problem, the problem that you're solving for is definitely a problem for the customer, but is it the 9th problem in their list of 10, or is it the first or second problem, right? So understanding that and understanding that is extremely important, because if it's a ninth problem, the propensity to spend money to solve for that problem is going to be much lesser. If it's the first or the second problem, then the inclination to spend is higher. So, so what Sir called as essentially early to the market, I think the way that we've kind of understood or incorporated that is to say, the problem is there, but it's just not painful enough, right? Like what is the depth of the problem in the industry? What is the urgency of the solution that is required for the industry? So I think we've had a couple of portfolio companies who've gone through that journey, who've essentially been in that place where the problem is there, but it's not deep enough, which means that they're not able to generate enough. They're able to generate interest from customers, but that does not necessarily translate into long-term orders as such, right? So that's one aspect that we've seen some of our companies go through. They've been smart enough. These are all smart founders, so they're able to pivot very quickly. They're able to recognize some of these things, some by themselves, some through advisors, some through investors. They're able to identify these things and say, what can I do now, right? Like, can I take a certain component of the technology and then monetize that early, look at the low-hanging fruits and get in some early revenues, get in some traction, while I continue to work with the long-term bigger customers and convincing them to invest in this problem, right? So those are a couple of things. I'll keep it short.
By the way, I should mention, I am an investor in Agnikul right from the seed round,
Wonderful.
along with Anirudh, and I think you were there in Shield Square also, Speciale.
We were there in
Shield Square, probably,
correct.
yeah. Amitesh, your views.
Yeah, so for us, look, we have started the investment journey like 2 to 3 years back. It's quite new in this
Yes,
industry, and if I compare us with, say, our peers like Shell or Rio Tintos of the world or BHPs, we are far ahead in terms of what we are doing with the startups. So I'll share one success story which has really worked for us is Detect Technologies. They are into AI-enabled camera systems, which we started by just putting as a safety element at our plants, especially in our oil and gas business, which is very, very important from a safety angle. And then we realized that with their alerts and detection of the unsafe activities, how it has really transformed the way we are doing business. And now we are seeing that this portfolio has grown so much. They have spread across in US, and we are seeing that traction. So we saw that as a technology which we thought could be potentially used for safety, but now it has become something which is really helping us, in our throughput as well, by identifying with their computer vision and giving us the analytics. So here is what our learning was, that you can start small with something, and then if the startup founder has that mindset to kind of diversify themselves and come up with solutions which actually helps beyond they can think of, and he was mentioning about being crazy. I think that is where it all lies, that how much you are going to put your skin and how much you're going to be crazy enough to come up with more ideas, and we're seeing Detect really growing very well.
Thanks, Amitesh. Bina, would like to share.
I think the learnings, bad news first, as one says, is in terms of not recognizing that some surges are, to use an oft-used word, could be fads or time-bound. So just like Anil said, you were early in time, you can probably be a little too early, and it's like seeing that flash of light and mistaking it for a bright day. Okay, so it does not necessarily play out. And some of the edtech stories, I think we've all heard. I'm not referring to any of the known names, but that was a learning. I think founders' skin in the game is a big learning in every which way. And one hears the positive aspects of the Agnikul founders, etc. So one has to kind of flag for inadequate skin in the game. In terms of positives, I think I do want to stress this. Let the articulation of your thesis not be read as being able to speak in English or a certain language, or for the lack of a better word, suave or etc. I think it's the clarity of thought one is looking for. And one of our fintech initiatives, he's a total, grit founder in his space. He doesn't have to deal with what the Agnikul founders have to deal with, but is so with it, steps on the gas, is personally vested, totally driven, and has, done amazing work. And we've got a part exit, we're still holding on to the balance. And just like Anil gave a counterfactual or whatever it is to the success, I like to quote this to founders. We had made an early stage investment in a company where the founder was diagnosed with terminal illness, and he had half the money left in his bank. The day he told us about this very unfortunate development, he said, I have half the money sitting in the bank. I'm going to return that, and I will try and return the balance at the earliest. We were just so overwhelmed. We were totally overwhelmed, where we said, listen, this is not the time to discuss all of this. Appreciate your transparency, honesty, returned half the money, and touch wood, he's on his way to recovery. And we like to work with founders who are so conscientious, and we don't have to worry about things. But yes, we lost money, but I don't view that as a failure.
Thanks, Bina. Manoj?
So first of all, how do we define success or a failure? I mean, sometimes in this industry, it is defined by valuation, ability to raise capital, which I don't think is the right metric at all. Success does not mean that you have raised a lot of capital, your valuation is growing. Many times a unicorn is not necessarily somebody who would have given very high return to its investors, because they would have raised so much of capital. It would have multiplied, but because they raised so much of capital, the growth in value is not really that much. So what is important is your product journey, product market fit. Are you able to get customers to use your product and then earn revenue? And is that revenue actually giving you positive cash flow? So that journey is what every founder goes through. But today what has happened in deep tech, and there are areas where that journey comes very late in the game. Like Agnikul example, we have spoken again and again, is one that kind of a company. And similarly, there are companies in semiconductor who will take much longer to even reach that level. So there we have to measure by the product development journey. And at each step, what success have they achieved? For example, have they developed a component which is working, which will take them closer to the final product? Have they done the necessary tests which have been proven? So, but in a typical journey, like areas like SaaS or typical products which get developed in a couple of years in which we invest, I think important is the journey after the product is ready and the acceptability of the market. Since we have all been talking about failure, in our case, we invested in a company in trading data analytics, deep, very good tech, patented tech. They had 50, 60,000 users using them, and and with quite heavy engagement, till they did not have to pay for it. And the moment they started charging, people were not ready to pay for it. And when we did a deeper analysis, we realized that 90% of the traders don't make money. Despite the huge growth in future and options, they don't make money, so they're not ready to pay for any external tool. They probably end up using free tool or tools probably offered by their broker. But the good thing is, when we invest in such companies, we also see, will this tech in a worst case scenario have value? So today we are able to exit that company and get our money back, which probably is our worst performing company, but we still are able to get our money back. So that is because of the product development journey, and there is a broker which found good use of that tech, maybe will offer it free to its customers. So these are important aspects which we look at even when we invest. Will there be value in a worst case scenario for the tech? Then talking on the success side, what I have seen that, typically all investors, especially larger investors, look at, is this company growing fast enough? Is it becoming a rocket ship? See, all companies will not go in that journey. I mean, there will be products which will take time. You have to really market will accept something else, then you have to correct yourself, and you then come to a level where you're finally, your product is ready for the market. In that journey is the investor. So for an investor to understand that and keep supporting your founder or the company in those stages, because they may run out of capital, but there is potential. So we have done that kind of investing in 2-3 companies in a bridge round, and today they are doing very well. Today, even in value terms, I mean, since that is an important metric, they are probably 50, 20, 25 times of at what value we had invested. So one of them is in enterprise tech, where they provide technology to banks, and the banks are lapping it up. So they took their time of probably 3-4 years to finally be able to get the right product. And today, out of that right product, they have come out with multiple other offerings, which banks are again lapping it up. So these are journeys where an investor has to understand, identify, and stay with the team or the company.
Thanks, Manoj bhai. Before we wrap up the session, I think we owe it to all the startups. Would request all of you to just say one line which you think might help their journey of pitching or growing or going to any investor. One line of wisdom from your end. We'll start with Bina.
Keep it simple.
Thanks,
Keep
Bina.
it very simple.
Thank you. Manoj.
So stay focused on what you are doing. Talk about yourself.
One line.
Stay focused on what you are doing.
Thank you. Anirudh.
Focus on customer capital, and venture capital will chase you.
Have clarity of how you will actually enhance customer experience.
Anil.
Stay focused.
Sunil.
Yeah, understand your investor before you pitch to them.
Thank you, ladies and gentlemen. I hope you enjoyed the session and we could create some value for the time you spent. We would request, give a huge round of applause to all the people who have spent 2 days of their time and energy and left a lot of important work to spend time with you all. Thank you so much.
Thank you for such a wonderful session. I do believe that your insights is very much enthusiastic and valuable for the startups present here today. So before concluding the session, I would like to request Mr. Daftari to please present the mementos to our esteemed panelists, starting with Ms. Bina Trivedi, Mr. Amitesh, Mr. Manoj Agarwal, Mr. Anirudh Damani, Mr. Amitesh Sinha, Mr. Anil Joshi, and Mr. Cavale. Thank you.